The federal government is about to start taking up to 15% of your paycheck again. No judge, no hearing, no lawsuit required. That power's actually been on the books since the 90s. It just got switched off in 2020 and stayed off for about 5 years. Now, it's getting switched back on for millions of people starting this fall, and a lot of borrowers have no idea it's coming. Let me give you the actual timeline because this isn't some vague future threat, it's already in motion. Wage garnishment briefly restarted back in January. Then the Department of Education paused it to roll out a new repayment plan called WRAP, which launched July 1st. Here's the part that matters to you right now. Once a borrower gets their notice, they get 90 days to enroll in a new repayment plan before collections ramp back up. For a lot of people, that window is already closing, and once it closes, garnishment resumes automatically. Now, I want to be fair about how this actually works because it's not as random as it sounds. You have to be in default, which means 270 days or about 9 months of missed payments. And you're supposed to get a 30-day written notice before any money actually comes out of your check. So there is a process here, and there are exits along the way if you catch it in time. This isn't the government reaching into your account with zero warning, but almost 8 million borrowers are already in default right now, with millions more projected to join them, and a lot of people are going to miss that window simply because they didn't know it existed. Notices go out by mail, and if you've moved, changed jobs, or just don't open every piece of mail from a loan servicer you haven't heard from in years, it's easy to miss the clock starting. So let's talk about what 15% actually looks like on a real paycheck. Say you're bringing home $3,000 a month after taxes. 15% of that is $450 gone every single month, taken straight off the top before you ever touch it. That's a car payment. That's 2 weeks of groceries for a family. That's the difference between making rent on time and being short. And here's the part that should really bother you. The law does protect a minimum amount, so you're guaranteed to keep at least $270.50 a week. But guaranteeing you won't go below basic poverty level income isn't the same as protecting your paycheck. That's the floor, not a safety net. And unlike a lot of other debts, this one doesn't need a judge to sign off first. Credit card companies, medical debt collectors, most private creditors, they generally have to sue you and win before they can touch your wages. The federal government skips that step entirely for defaulted student loans. And the timing on this makes it worse. This wave of garnishment is hitting at the same exact time a lot of these same borrowers are getting hit with higher health care premiums because the Affordable Care Act subsidy increases are landing in the same window. So you've got the same working people getting squeezed from two directions at once. Less take-home pay from garnishment, higher premiums eating into what's left. Betsy Mayett, who runs a nonprofit that helps borrowers navigate exactly this kind of stuff, has flagged this exact collision as uniquely bad timing, and I'd argue uniquely bad timing is underselling it. This is two systems tightening at once on people who already don't have the slack in their budget. Miss a premium payment because your check just got smaller, and now you're also at risk of losing health coverage on top of losing income. Two separate financial cliffs opening up in the same season for the same households, mostly by coincidence of federal timelines that nobody coordinated with each other. Here's what actually bothers me most about this. Wage garnishment doesn't even count toward loan forgiveness, so you can have money forcibly taken from your paycheck every month, and it does nothing to move you closer to being done with that debt through any forgiveness program. It just goes straight to collections. You're losing money out of every check with no finish line attached to it. So what do you actually do if you're in default or close to it? First, check your status right now. Don't wait for a letter in the mail to tell you. The Department of Education's loan simulator and your loan servicer can tell you exactly where you stand today, not in 90 days. Second, if you're not already in default, look at income-driven repayment or the new WRAP plan before you get anywhere close to that 270-day mark. Those plans can lower your payments based on what you actually make, sometimes down to very little if your income is low enough. The WRAP plan specifically was built to replace the old SAVE plan, and it ties your payment to your income rather than your loan balance, which matters a lot if you're working an hourly job with a balance that's ballooned from years of interest. Third, if you're already in default, loan rehabilitation or consolidation can get you out of default status and stop garnishment before it starts. But you have to initiate that yourself. Nobody's going to do it for you, and that clock doesn't pause because you've been busy working a full-time job trying to keep up with everything else. So here's my actual takeaway. This isn't a story about people who irresponsibly ignored their loans. A lot of these borrowers went years without a single missed payment notice during the pandemic pause, then got dropped back into a system that changed the rules while they weren't looking, with real financial consequences attached the moment they blinked. The people who will get hit hardest by this aren't the ones with disposable income to spare. They're the ones already living paycheck to paycheck, about to watch $450 disappear from a check they were already counting on in full. And unlike credit card debt or car repossession, there's no negotiating with a collector on the phone here. This comes straight out of your paycheck through your employer automatically, month after month, until it's resolved through the system itself. If there's one thing I want you to take from this video, it's not wage garnishment is scary, it's check your status today. 90 days feels like a long time until it isn't. And the system set up to help you fix this before it happens only work if you use them before the letter arrives, not after. The people who avoid this entirely are almost never the ones who had the least at stake. They're the ones who checked early enough to still have options. If you enjoyed the video or got something from it, please subscribe and like. It helps the algorithm and it helps my channel grow. Thank you for watching, and I will see you in the next video.